Central with me, Nayantara Rai. Now, in recent times and during the pandemic, what we've actually seen is consolidation among startups. And these are not acquisitions that have taken place because of distress. They've taken place primarily because one of the acquirer has sensed an opportunity. Joining me to talk about this trend is Karan Mohla, partner at Chirate Ventures. He's joining us live from Uttarakhand. So Karan, thanks a lot. I know we had to convince you to join us when you're with your family in the hills. We really appreciate it. What do you make of this trend? Look at the recent times, and you've seen quite a few acquisitions, right? You didn't have a unicorn from the healthcare space, but then came along the merger between Pharmeasy and MedLife, valued over $1 billion now, the combined entity. You've had Reliance Industries take a controlling stake in NetMeds, Urban Ladder. There's all this talk of Tata's buying into Big Basket, Google wanting to buy ShareChat, and there have, of course, been other deals as well. Does this show maturity?
Yeah, well, thanks. I think firstly, thanks for having me on, Nayantara. I think it's a very topical thing, that you brought up. It's actually interesting because if you look at how consolidation in the tech, especially in the tech startup ecosystem, has played out in the last few years, it's been sort of up and down. It's not really been a one-way trend. At least I think part of the reason why we're seeing so much of it happen now in a sort of a post-pandemic world is because of, I think, three main reasons. One, market dynamics have changed, right? Whether it's on the customer side, on the supply side, on fundraising. Profit pools are becoming smaller, and you're seeing large balance sheet incumbents coming in. So the overall opportunity, while it still may be large, startups or a lot of these companies are large companies now, are could find it difficult to raise capital and continue getting market share. So I do think some of it will continue, and there'll be different forms of it. You'll see pure consolidation or two companies coming together. You'll see adjacencies. You'll see product or market expansion. And you'll also see, M&A for technology, right? Especially in our sector. So I think it's kind of here to stay. And part of it is because the overall, situation at a micro level within segments, as well as at a macro level, has changed. And that changes the playing field for, all stakeholders, whether it's founders, whether it's investors. And I think that's sort of an evolving reality of the situation as we see it today.
Because what's very interesting is that barring maybe the white hat Baiju deal, where of course Baiju showed such a fantastic exit to white hat and the synergies were obvious, or if you look at Pharmeasy and NetMeds, it's actually big bucks that are flowing in and acquiring companies because they want to be in startups. I'm of course alluding to whether it's a Google or a Tata or even Reliance Industries for that matter.
Yeah, and I think it's not surprising because the first telling sign of this, at least to me, was when a lot of the large private equity funds over the last 3-4 years started investing, and they'd really stayed away to a very large extent. And I think that's the first step in how the overall ecosystem is kind of maturing with some of the larger business houses or a Google or a Facebook like they did with Geo. What they're really looking for is scale, right? And once they have scale, then it's much easier for them to say, okay, let's figure this opportunity out, and then we can blow it up even bigger because of our business expertise, our distribution. And I think that scale was missing to a large extent. We saw it with Flipkart and Walmart. We've seen it to some extent in travel, and now we're seeing it in other areas. So once scale happens, I think a lot of these consolidation moves, whether it's by industry incumbents or by business houses or by overseas or international giants like a Google or a Facebook, to sort of name a few, I think that's when it happens. And I think we're sort of at that precipice now, or we maybe have crossed it actually earlier this year. And my guess is we'll see a lot more of this till such time as the IPO market becomes a stated way or a more predictable way of getting exits for founders as well as for investors.
preempted my question that, I was going to ask you that is this going to be the prevailing trend till we have the clear-cut guidelines for IPOs, and of course the fact that there should be a mandatory secondary listing in India. This is the best way then for an exit?
I think this is a very sustainable way for exit. And I'll also say it for the reason that a lot of founders are thinking about, how can they grow faster, right? How can they either go to new markets, improve, technology expertise, or introduce new products? So acquisitions become much more of the sort of normalized way of growth for companies. And when companies are raising growth rounds or late stage rounds of capital, they're keeping that in mind. They're saying, look, even if we're close to profitability, let's raise a little bit more so we have a war chest which allows us to acquire. Also, they can use their equity as stock swaps, but it's tougher doing that for private companies compared to public companies. But it's also because founders are thinking about this. And you had Ronnie in one of your previous segments on the show tonight talking about what they've done at Upgrad, how they're looking to do it going forward. Same with Unacademy. It's a growing trend, and I think it speaks to the maturity of the ecosystem. While the IPO market will come, it certainly has to come. I think that's what everybody wants, including the government, the regulators. It may take a couple of years till some of the regulations are certified. Once the first company goes public, then the path is much more straightforward. But till then, I think this is a very good way for both growth for companies that can afford it, and exits for founders and investors, who've sort of taken it from to a certain level, for them to get or to realize some sort of exits.
Right. Karan, very quickly, because we're running out of time now, because this trend has picked up, and during a pandemic, at a time when you would think that startups would only focus on conserving cash, increasing their cash runways, you started seeing this prevailing trend. You've also started seeing how funds have been flowing into the resilient startups. Will this make the Indian startup story more lucrative? Because one has some faith that, okay, IPO or no IPO, pandemic or no pandemic, there seem to be options for exits.
Oh, absolutely. I think M&As or strategic exits are sort of the breadbone for investors of all sizes looking at any company or any country as an opportunity for investments. IPOs will always take longer. Once you have a sort of a growing ecosystem of M&As and across the board, not just in consumer, but in fintech, in software, in healthcare, et cetera, that creates a much more fundamental and sound ecosystem. So absolutely, I think we've seen that happen this year, which is interesting because most of these M&As have happened really virtually. We've seen one of them in our portfolio. So it sets us up very well for the next few years.
Karan Mohla, with that, I'd like to thank you for joining us live right here on Startup Central, all the way from Uttarakhand. That's the new trend that we spotted, ladies and gentlemen. We thought it's good to talk about it. M&As picking up steam during COVID-19. Completely out of time. We had an action-packed Startup Central for you. I hope you enjoyed watching it as much as we enjoyed putting it together. See you same time tomorrow.